Welcome to the Crypto Podcast. You can find all our episodes on thecryptopodcast.org. We're also on BitChute and YouTube. You'll find the links in the podcast description. I'm also a podcasting coach because I've got 5 podcasts, including this. I've also got The Awakening, The Speaking, Meditation, and The Learn Polish, and all can be found on roycollin.com. Today, my guest, as you can see from his beautiful screen, for those watching, the interrogating investor. Please welcome Seth Levine.
Hey, how's it going? Thanks for having me.
No problem at all. So you might let the listeners know who's Seth.
Sure. So thanks for that. So I am I'm a professional investor by day, and as you can see, I have a blog called The Integrating Investor that I really use sort of on the side to really explore some of like the like investment themes and ideas that are kind of tangential to my day job. I'm really a vehicle to kind of explore kind of like, all these different ideas. It's been pretty helpful, and you could subscribe and kind of come along for the journey yourself.
Yeah, cool. So you might let us know your crypto journey, because we've all kind of started at different times and have different stories. So I'd like to know yours.
Sure. Yeah. So maybe just to start, I should start with a disclaimer here that these are just my personal views. They don't reflect those of my employer. This is not investment advice, information kind of purposes only. Do your own work. Maybe there's a conflict of interest in something I'm saying. I don't know. But, the usual kind of disclaimers apply. I should say that right now, currently, I don't own any crypto. So that could be important for your audience to know as well, just to be clean. I have owned it in the past, but not currently. So all that out of the way, my journey with crypto has been pretty interesting. I've been following crypto since like 2011. I've been around a while. I'm not, as I say, a crypto millionaire or crypto billionaire. So, you could use that for, take that as information. I've been traded around it a little bit in the past, but nothing too substantial. Really just from an intellectual curiosity perspective. And it's been interesting to see how my views of crypto have changed over the past kind of 11 years. And really what I focused on now, and, maybe to start with the story. So, I got sucked into my interest in crypto really came early on from that, free money perspective. Like the early Bitcoin, it was not free as in like free, but like free as in deregulated kind of money system. I was really attracted to that, just given some of my kind of moral and political beliefs. I'm a big laissez-faire capitalist, and I thought, hey, this is like what finance needs. So I got pulled in, and I was looking at it. I was listening to podcasts. I was sort of in that world, and then I decided just to buy a little bit of it. And when I realized, like, this is going back to 2011, so there was a huge run up in price from like a couple $100 up to like $1,000, and I was like, you know what, like let me buy a little bit here just to see just to get involved, and see what's going on. So I bought some, and like it immediately crashed. It went from like $1,000 like 250. It was the like quote unquote crypto winter, that you've heard kind of people talk about in the past, and why it collapsed and kind of all that catalyst really opened my eyes. So like at that time, this was like the first time that maybe China cracked down, had its first kind of crypto crackdown, and it crashed. Here I am, I had this thesis of like, deregulated money. And then why is something in China crashing the market? So that was my first, that was an introduction to like, hey, maybe crypto isn't what I think it is. And, kind of since then, I've really spent, a lot of effort just trying to untangle all the different abstractions that come with crypto, because crypto is, maybe started with these idealistic, kind of principles, and people carry them forward to this day. And I think it really clouds people's thinking, and, maybe brings them to enter the space on maybe some kind of faulty assumptions. So I could expand on that.
I like it, because I'm seeing because we've heard the AmongGox, as I think it was called, but like there's a big, I don't know about you when you started doing it first, but I know with me that there's a kind of panic because you make a mistake with your bank account and it just doesn't go to that account, or else you can kind of claim it back. But you make a mistake in this and it's like bye-bye.
Yeah, and that is that's a feature and a bug of it. I mean, it is supposed to replicate sort of cash in the sense of like there is no authority. Like ownership is proof, right? So if you lose, if you lose it, it's like if you had a bill in your hand, a euro or a dollar, $100 or 100 euro, and like, oh, like you lost it, fell out of your pocket, like it's gone forever. And the same concept is with crypto, and that was a feature and a bug of it too, which I think is interesting too, because then it just maybe delineates maybe what you would use crypto for, because there are some circumstances, like legitimate ones, like not just like illicit drugs and things like, and purchases that are illegal, but like there are some things where anonymity is valuable, and maybe crypto can kind of serve as a purpose for that. But there are other like kind of transactions where like I need that. I want that counterparty. I want a counterparty in there. Like, I'm glad I have a credit card company that I deal with, right? And I, in one way, shape, or form, pay for that. Because if I get fraudulent transactions, I'm not accountable for it, right? I basically call up my credit card company and they go and they reverse it. I was like, hey, this isn't my charge. And like, yeah, and they reverse it, right? They assume that kind of risk. And there are certain transactions where like I would want that fail safe, where I can go back. So like if I was going to send like $1 million to you, Roy, or €1 million, right? Like I would want that to be traceable, right? I wouldn't want to use like Bitcoin to transfer that per se, because what if something screws up? Like that's a lot of money. That's a lot of money to me. I don't know about you, but like that's a lot of money to me. Like I would want to make sure that gets there and there's some sort of insurance or assurance that it gets there on time. And that's something that, you couldn't do with like Bitcoin, for example. So, all this stuff is kind of developing. I forget, I kind of went off on a tangent already, but, that is definitely part of sort of the crypto narrative that I think people are starting to reconcile. They're being forced to reconcile because of things like AmongGox. There's another big, crypto fraud pretty recently. As protocols kind of, as we're experimenting with different kind of protocols and tokens, and as those are going well and some are crashing, people are looking for audit trails, because it is an industry, for better or for worse, it is the Wild West. And, there are kind of frauds out there.
It seems to be, the more I'm looking, it's getting bigger and bigger. And I don't know, is it 30 billion or trillion? But there's somebody that's robbing a lot of crypto and they're not spending it. And I'm thinking, have you heard about that? Like, I think that's kind of government organized. I don't know, that they're trying to stop people getting involved in this. It's a strange one.
Yeah, it's tough. There have been some kind of, thefts out there. But, the Mount Gox collapse is an interesting one. I mean, that, basically, right, you are transacting with an exchange that in theory has your assets in separate accounts, right? Custodian accounts. And then that goes bust. And then like you should be in any US or exchange, the regulated is the wrong word. The regulations aren't the reason why, but let's just call it a regulated exchange, like a professional exchange. Like your assets are separated, whereas Mount Gox, like you lost them, right? And now you're a general creditor of a defunct business, and that is based in, I think, Japan. Like that's just not a good position that really anyone wants to be in, especially if you have substantial amount of wealth tied up in that.
There's a documentary that was done on that, and it was interesting because there was even people traveling across to try to get their money, and it was nothing done with it. So, what happened kind of recently with Lunar? Like, what's your thoughts on that?
So I've actually just trying to wrap my head around it. So I'm not an expert on what went on with Luna, but from what I can tell is like it. I was literally just reading up on this yesterday, and it just seems, I have two thoughts. One, like I think crypto in general is very positive, in that it is bringing innovation to the financial service industry, which has really suffered from a lack of innovation. And I tie that all back to regulation and the regulatory environment. Like, it's very stifling. It's very hard. There are very high barriers to entry to do anything new in financial services, right? I mean, like, think about like the most exciting development over the past, maybe like 20 years, like prior to like maybe like 2010, like what was the most exciting, banking experience, like financial service experience you had? It was like, oh wow, there's an ATM on every corner, like that just seems like pretty boring. Like, like I don't know anyone who loves their financial service provider. Like people love people love like Apple, right? There are companies that people love and they love the experience. And it's not just in, consumer products, you see it like across the board, except for like financial services. Like everyone kind of hates. And the same thing goes for like an industry like healthcare. And there's a couple other ones, but what do they have in common, right? What they have in common,
they're all fraudulent.
Well, I wouldn't say they're fraudulent, but I would say they're highly regulated, and the regulation creates, basically it's a ginormous barrier to innovation, and it creates entrenched players, and it creates cronyism, and all sorts of things that get in the way of really of moving the industry forward. And crypto is a way around the regulatory, the stifling regulations in financial services that have really, prevented it from innovating. So in that regard, like I think crypto is incredibly positive. And you're seeing all this interesting like experimentation going on in crypto. However, the flip side of that is crypto is an industry, is one of the few places where you can actually, I'll say speculate, and I don't mean that in a bad word, but you could participate and speculate on innovation as an individual. And again, that is also kind of regulatory driven as well. And what I think people are seeing is that, there's a lot of really hard lessons being learned about investing in innovation, right? Like people think it's so easy to do, you have a great idea and you invest in it, but it's a separate skill set that you need to develop over time. Like investing is very hard. Investing in startups is very hard. Like people just see the returns, but they don't understand the losses. Like it's a whole science and an art to it that people have studied for a really long time. And it's really hard to do. Again, this is why I have, like the website here. Like I was an investor, the story behind the website is, I was a professional investor for over a decade. And then, kind of going into the, the great financial crisis, I saw things that were shocking to me. I was like, why is this happening? This isn't how I thought the world worked. Like, for example, the central banks started to become extremely, intervening in financial markets. And I had all these thoughts, like this is going to do a lot of bad things. It's going to collapse the stock market. It's collapse the US dollar. It's going to be massively inflationary. And I wasn't alone on this. I had my favorite, stable of experts who I relied upon. But as we kind of rolled this forward, I saw, none of that actually happened. So I was kind of faced with the choice, like, am I wrong or am I just early type of thing? And so I started this website and I would write on it to try as almost like a diary and kind of work out some of these ideas. And, like I have very different ideas now than what I had at the start of writing. Like I go back and I read some of those articles and I'm like, oh man, that was a terrible idea. And, it's not that I don't think central banks are bad these days. I just have a completely different view of how and why I think they're bad. I mean, I think they're extremely harmful, but it's a completely different way that I think other people, conventionally do, and how and more importantly, I have a different view of that now than what I had, back then when I started writing. So bringing it back to crypto, it's very difficult. Like go back to there's an analogy to like the tech bubble, right? People, in the early 2000s, late 1990s, people were like, the internet is awesome. The internet is going to change the world. Let me go out and buy everything, right? And you could have had that view and you would have been dead right. The internet changed everything. However, if you wanted to express that in a put all of your money, all your life savings in like pets.com, like you would have been wiped out, right? The investing in the innovation was a separate thing than liking the innovation. And I think we're seeing that kind of play out in crypto. And, some people learning like really hard lessons from it. It's kind of sad to see, just as like being just a person, but like, it's the same story, over and over again. Like we don't need regulation in crypto. Like we just need people to realize like, it's like, you have to have, there is a skill set required for investing in crypto, and, you can develop it if you want to. It's not like you're born with it or you're not, but you have to treat it with that kind of respect.
Some people they go onto TikTok, they'll get a recommendation, they go away and they think they're crying then because it's just wrong.
Hey, there's nothing new under the sun. One of my favorite books is it's called Reminiscence of a Stock Operator. It's a fictional story, but supposedly based on the true life of Jesse Livermore, who was a fiction, famous trader from like the early 1900s here in the U.S. And he has in the book, the main character is like, he talks about trading on stock tips. Like everyone wants a stock tip, right? Everyone wants to get rich without kind of doing the work, and that's just kind of human nature. And you just see it's the same thing in crypto. Like go on TikTok and hear some people pump up a coin, and you can actually go and buy it. And the volatility is so high, in crypto, where like, you could actually make a lot of money if you time it right or get lucky. But the exact opposite is true too. The risk of ruin is extremely high.
You should only do it with play money. And I encourage everyone to just kind of, whatever is an amount that you can, follow to your pocket, as we mentioned earlier, that you're not going to cry over, and start just getting used to transferring it, getting used to the different exchanges. And then if you have a less chance of making a mistake as well, if you're doing it with money that's not going to make you cry. Like,
yeah, I think everyone needs to kind of evaluate kind of the crypto investment within their context of kind of their own life, size things kind of accordingly, right? Like I'm not going to condone or I'm not going to support or kind of speak against that for sure.
Like, because your investment background, like a lot of people, they basically, they're so disappointed with the banks and investments because people have lost pensions and everything. But in reality, I know there's some crypto systems now that they're giving a 12% return, and like this pensions. I mean, I see my own pension. It's from when I was working in Ireland years ago, and it's like they tell you, oh, if it goes up 6%, it's going to be this. If it goes up 8%, it'll be this, and it's constantly nothing. Like, and I've talked to other friends as well, and it's the same. And some of them are charging like 5%, and then it's like 0.75% now. But the reality is, you don't know what they're doing with the money, and they could be making 300%, and they're telling you, oh, made 5% or whatever. Whereas if it was done on a crypto system that you could see, I don't mind paying a percentage. If they're, if someone was making you 20% and they were taking a 5% out of that, you'd be happy to do that.
Yeah, I mean, I'd say a couple things. Like one, like you have to trust your pension system. That is for sure. But I mean, we also live, in Ireland, in the US, in the Western world, like we are living in pretty strong, we have pretty strong legal frameworks here. That, if, that would be, if they're just pocketing money, like that's fraud, right? Like we have laws that protect against fraud. And again, you are, by incorporating, like you are, and taking in clients, like you have like contracts, right? And you're breaking contracts and fraud. So like there are legal systems where I don't think like you have to worry about your pension system kind of, pulling one over your eyes. But this distrust of financial services, which I think links back to cronyism, which I think leads back to regulations, the regulatory environment, is one of the big reasons why people are so enthralled with crypto. Crypto is so emotional because it has this like Robin Hood, the storybook, the story quality to it, where it's, David and Goliath, right? Where like you're almost taking power away from the big cronies in a very just scenario. for yourself, right? It's the little guy beating the big guy, but the little guy is also earning it in a sense, right? There is a justice aspect to crypto where the little guy is coming in to compete against the big guy and doing a much better job. And that I think you would get in just a deregularized finance in general. And that's sort of the positive aspect of crypto. However, I think people take that, almost a little too far. Like, for example, I saw a tweet like a month ago or maybe 2 months ago at this point. It was like, crypto is a vehicle for social justice, or Bitcoin is a vehicle for social justice. And, everyone's like, yeah, Bitcoin is a vehicle for social justice. And you're just like, wait hold on one sec. Bitcoin is a decentralized database. That's all it is, right? It's super innovative. It's, very innovative. It's like, maybe it has like applications, but it is not a vehicle for social justice. Bitcoin, it decentralizes, right? It frees the users of Bitcoin from any central authority. But how is it used for social justice? And because because of the experience that you described of like being frustrated and distrustful of financial institutions, people are now kind of taking that emotion and ascribing it to, these token, the crypto, which like it's in an inappropriate manner. And I think that's going to lead to as much misery kind of on the other side too. And maybe, some of these coin collapses are good examples of that, where people are getting sloppy in their work. They're not, they're investing more in emotion than necessarily, the concrete idea that they're investing in. And, let's just pick on Bitcoin. Like, people are investing in Bitcoin because they think it's going to be, it's going to, there's a, the Bitcoin meme out there is like, Bitcoin solves this, right? It seems like any problem in the world, Bitcoin fixes it, right? Problem in the financial system, Bitcoin fixes. Well, no, like, Bitcoin doesn't fix any of that stuff, right? Bitcoin is a decentralized database. You may be able to like use it in some applications, to transfer money around and transfer wealth around, or like verify things, but like, let's not take it too far. When you take it too far, what you find is you are investing on a thesis that is completely disconnected from the actual instrument that you are purchasing. Same thing like pets.com, right? Investing in the internet, it's going to change the world. You're betting on investing in an online, pet retail store that has, awful fundamentals and eventually collapse into bankruptcy.
Yeah. And just on the investing in the crypto world, what I've seen with some of them is they've got it lucky the way the markets went, and then they decide, oh, if I put it on 10 new coins or 20 new coins, they're making the assumption that it's going up, and then they're depressed then that it doesn't go that way, and they end up losing the money.
Yeah, and that's interesting. Like, I actually wrote an article, I forgot when it was, but if you go on my website, right up there, and you go and you search by like crypto, there's an article I wrote called like Deconstructing Bitcoin's Zeal into Investable Thesis. Deconstructing Bitcoin's zeal into investable theses. Pretty sure that's it. And in there, it's like, I basically applied a framework that I've developed on the website towards investing. And basically, the way how I see investing is, I invest based on one of two theses. It has to have a value thesis or momentum thesis, and I'll expand upon those. A value thesis is like a very traditional fundamental approach, right? It has to be a utility value to the thing that I'm investing in, right? So I'm going to invest in this company because of the cash flows. I'm going to invest in this company because of the business prospects. I'm going to invest in kind of very traditional reasons for investing, kind of, like the Warren Buffett kind of way, right? Like, not necessarily buy something cheap, but there has to be a reason for invest that corresponds to the real world of what that thing does. Then I have investments that I call momentum investing. And momentum investing is just trend, right? Is the price going up or is the price going down? And for whatever reason, it can be going up because, for any reason, but as long as I think there's a momentum, reasonable momentum behind that trend, like I think that's a valid investment thesis, right? So in crypto, there's this idea that like the institutions are coming, right? There's this wall of institutional money that is just going to come into crypto, bid everything up, and everyone's going to get rich because all the institutions are going to pay higher prices for your tokens. You know, as if institutional investors are that dumb, but that's a separate question. You know, so what happens, and like that is starting to happen, like there is more institutional momentum in buying crypto. You know, you could see like headlines over the past couple of years. You know, been US life insurance companies that have bought some in the headlines. There's, you know, more, you know, banks involved, you know, whatever. But what you're seeing is more buyers enter the crypto market and the price is going up. And what that's doing to some people is that is validating. They're taking that as validation for their grand crypto theses. Like, oh, Bitcoin's price is going up. It must be because it's the next money. And then they go and they buy more. Well, no, like there's no evidence that Bitcoin is being used for anything other than speculation, and maybe in a handful of maybe applications, right? People are trying to use Bitcoin maybe as like a next rail to the financial system. I don't even know if they're doing that anymore. But, you know, you look at like in South America, you know, now it's like going to be like, you know, and you know, it's their, you know, legal tender, and which is probably an experiment that's not going too well as of today. You know, we'll see where it goes. But there's no evidence of like, if your thesis is I'm buying Bitcoin because it's going to be the money of the future, like there's very little evidence over Bitcoin's 14 years of history that's really happening. What appears to me to be driving the price, and this is my personal opinion, is more people are speculating on it, and the price, and that's fine. Like I have no problem with that. My issue is like, I just want to make sure that I'm honest, that to myself, that is what I am speculating on, as opposed to fooling myself that it's being used for something else. And that's just Bitcoin in general. Like, you know, there's a ton of other cryptocurrencies out there. Some are being used for some things. Some are just like pure, you know, speculation, you know, that are almost jokes, you know, in a sense.
Yeah, exactly.
In fact, you know, Dogecoin was literally started as a joke.
Exactly.
I mean, that is like why it was started.
I know it's not like number 9 or 5 or something, is it? Or
yeah, and like, you know, now people are speculating, oh, like it's not a joke. Like, you know, Elon Musk is going to use, you know, loves Dogecoin and wants to use in Tesla. Like, okay, like are people using Dogecoin to buy Teslas or any other reason, or is it still just this joke that's building on, you know, kind of momentum? Like, I'm not going to tell you my analysis. Like, just do that work in your head to figure out why you're buying something like Dogecoin, you know.
Exactly. And because I've seen your blog is actually very good, and yeah, there's a good engagement as well. So like I see you recommend a lot of books, and I know that at the start I was trying to look at on a Kindle reading lots of, and I was bamboozled, and they were very badly. Is there any that you have read that you think are good ways of explaining it for the people and good information?
Crypto or investing?
Crypto, in the crypto world.
I haven't read anything on crypto. I mean, the first thing I would start with is just read the Bitcoin white paper. I mean, that clears everything up. You know, that if that doesn't clear everything up for you, what you're doing, like, you know, then nothing will. Like the title of the Bitcoin white paper, you know, it's pretty easy Google search. It's like Bitcoin, a peer-to-peer, like cashless payment system, something like that. Like, it calls itself a peer-to-peer payment system. Bitcoin was designed, and it's ingenious, to be a payment system. It was not designed to be, you know, kind of a financial backbone, you know, a financial service backbone, an economic, you know, it was not designed to do that. Like, it is literally just designed to, as a decentralized database, right? And that is a great place to start because it's eye-opening. I don't know how many people have even, you know, read that. You know, obviously a lot of people have read like the white paper, but the percentage of people who have read the white paper versus investing in crypto today, like, it should open your eyes in terms of like, hey, like the abstractions are separate than the thing that I'm actually buying. And like, let me get my hand around the head around what I'm actually buying, as opposed to like what I'm, you know, what I think I'm buying, right? But even in terms of like what books or recommendations, like to invest in crypto is to invest, and there's no different than investing in stocks, stock in bonds, in commodities and derivatives. Like, it doesn't matter. Like, the investing principles are the same, and that, I think, is what's tripping a lot of people up. Like, these concepts of like diversification and valuation, which is kind of hard, but even like separating out value from momentum, right? Price, trading on like a trend versus trading on like a fundamental thesis. These are very old investment ideas that apply to other investment vehicles, that like investment asset classes that you should, I find, are like very helpful in crypto. And like I mentioned one book before, Reminiscence of a Stock Operator. I mean, I've read that book like 3 or 4 times. It was from like 1923 or something like that. And those lessons from then, like every time I read it, I come up with a new lesson like today. So if anyone who wants to invest, like that's like usually my first like book recommendation there. And the first time I read it, I was like, I don't really get it. But kind of the more I come back to it, the more nuance I find. So maybe it's a book recommendation. I'd start there.
No, brilliant. And I'm like, I read a load of books. I read about 100 books, and I find it's the older books are the better ones. Yeah, exactly, the principles. And just finally, because you mentioned the utility in the different cryptos, what their kind of true value, and what's the purpose of it. But like with NFTs, because that's something that I'm actually putting together a business on that with digital art, because I actually see, okay, this is something that's decent. Is that something that you've touched on much on the NFTs?
So I wrote an article on NFTs too. I forgot. I think it's in I forgot what it's called, but there's definitely, if you go in the crypto, I've written a couple, the one on the metaverse, one on NFTs. I think I wrote one specifically on NFTs. I'll pull that up for you at the end, but yeah, like what are NFTs are great. Like there's a perfect illustration of what I mean. Great is, I mean, they're a great illustration of the crypto, of what is possible to do in crypto from your own mind perspective. You're clarifying your own thought perspective. So what is an NFT? Like, an NFT is a type of cryptocurrency that is unique. People are finding really interesting things to do with it, right? Like, people are talking about like securing titles for it, right? That's pretty interesting. People are looking at, securing like collectibles. So there are things that you can do with NFTs, but like on a specific NFT basis per se, that may be valuable. Like, I think the biggest use case for NFTs still right now is our collectibles, right? So, should you go out and buy Beanie Babies, for example? Like, I don't know. I don't have an opinion on that for your specific context or not, but like, you could see how NFTs can be used for things, and how NFTs are being, kind of speculated on in kind of like really silly ways, like, like all those old Beanie Babies were, back from the the 1990s. So, I don't have an opinion on NFTs per se, but like, I would just look at it like, what is an NFT? An NFT is like a non-fungible like token. It is a potentially useful way to keep a record and of something, a digital record in a decentralized format. And will people find innovative ways to use that? Like, it certainly seems promising, and certain ways it seems promising, and certain ways, it seems like, it doesn't. So I think it's very individualized, but if you take that approach to understanding what the NFT is concretely, as opposed to like the abstractions of I'm going to get rich on NFTs, just what is an NFT? I think that will help clarify how you approach it from a financial perspective, in terms of like, is this particular NFT something I want to buy because like I could just flip it, like, like maybe art or something, or collectible, or like maybe it's a music royalty that's going to come on NFTs, where maybe there's like a cash flow that I could really understand from a traditional investing perspective that's going to be used, when traded type of thing. So.
Like, because I know I missed the boat on the crypto world, but with the NFTs, because based on this and having different guests on, I kind of went, ooh, and that's why I've started kind of creating the digital art. So I have a few projects ongoing, but I'm in like an organization, I go to different events, and they're doing one for charity, and the utilities that's in it. So I have a bid, it's closing in about 15 hours. So I don't know will I get it, but they've got about 24 pictures. So there's a good chance I get a different one. But the utilities are worth, it's like about $1,000, right? So half an ether at the moment, right? But the utilities are worth over $5,000. And there's something that I would use, that they're actually things that I'm paying that. So there is some, and there's a big organization, and there's a load, there's no bids on it. You know, it's a minimum of a half a Ethereum. But it just shows that it's very early days, that like you would think people see this, that they could use it. You know, it's like you get the free tickets to an event, you get lifetime membership that you'd normally pay $300 for and stuff. And it's like, this is something that I'm spending anyway. And I was shocked that the amount of people that aren't doing it. Plus, they've got a big organization. So it kind of comes back to, it's like podcasting, it's like anything. It's all about the marketing. Same with your blog. You know, it's like you just assume people are kind of, you have to seriously kind of educate people. And they made an assumption that there's a lot of people kind of understand this, and obviously it's not. That the fact that, well, I mean, my next episode will probably let people know whether I've been successful, but I'm hoping I am, because you know it's technically going to save me a lot of money.
Yeah, I mean, look, it's early days in crypto for sure, and again, just like the tech bubble, like a lot of these in 10 years, a lot of these projects you're going to laugh at that they existed, and it's early stage investing is a particular skill. This is what venture capitalists do. They specialize in this. So, I would just say, like, be careful on yourself, as you kind of venture into this world and place your bets places. Like, to be sure, like, you can do really well if you have like a really good analysis. Like, there is probably a lot of edge to be had in crypto at the moment, but make sure you have it, make sure you understand how to manage your kind of risk, manage your risk, and, and realize, like, you could be wrong and a lot of the stuff can go to zero. So, there's going to be a lot of interesting developments over the next couple of decades in this, for sure, as long as, as long as you don't kill the golden goose. And that's, kind of like what makes me excited about crypto, as well as kind of cautious.
Exactly. So I know for those that are watching on both YouTube and BitChute, they can see all your tag, your website, your Twitter and everything, but you might let those for that are listening, where's the best place to find you?
Sure. Yeah. The best two places are, the first place to find me is on my website. It's called integratinginvestor.com. So it's the Integrating Investor, www.integratinginvestor.com. That's where I write. I write about once a month, or I do write once a month. You could sign up there, to get kind of my blogs just sent kind of directly to your email. There's no other spam. Like, I'm not doing this as a business. You're not going to get spammed or sold anything. But if you do want to read kind of my articles, otherwise, kind of the other best way to reach me is on Twitter. Matt, got the very unique Twitter handle at Seth Levine 2. That's at Seth Levine 2. Like Seth Levine, I guess, was taken. I'm pretty accessible on Twitter. I do a little bit on Instagram, but not much. It's at the Integrating Investor. It's my Twitter handle. I mainly just kind of look at jujitsu videos there. So if you want to, kind of chat jujitsu, that's a good place to reach me. But otherwise, I do read all the comments that I get. I do try and respond to people. So I'd love to hear any feedback that anyone has, if you're reading my stuff or have an opinion on any, or want to share something. I'm pretty open and accessible.
Excellent. Great talking to you, Seth. Really enjoyed the conversation.
Yeah, likewise.
So that's all for the Crypto Podcast. You'll find all our episodes on thecryptopodcast.org. As mentioned, more on BitChute and YouTube. You'll find the links in the podcast description, as well as all of Seth's links. So be sure to subscribe, give us a thumbs up, 5-star rating. Really helps. Until next week, take care.